What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things related to stocks and investing, and today we have an interesting story on Rocket Companies, the parent company of Rocket Mortgage and Quicken Loans, which is up more than 50% today and appears to be experiencing a short squeeze. Keep in mind that we are not financial advisors, and this video is for educational purposes only. Make sure to do your own research before making any investment decision. Yesterday, we published a video on Rocket Companies saying that it was a high short interest and recently announced a buyback plan that potentially made the stock vulnerable to a short squeeze, and today it appears that that is exactly what happened. Roughly 40% of the company's free float was shorted, and they recently announced a $1 billion share repurchase plan that could reduce the free float even further and catalyze a short squeeze. At the time of recording this video, Rocket Companies stock is at an all-time high above $40 a share, blowing past the previous peak of $31 a share in September. Rocket's share price action is perhaps the biggest financial news development today, and CNBC hosts are speculating that it could be yet another Wall Street Bets fueled rally.
Take a look at Rocket. RKT this morning was up much higher than it is right now, but still a 15% gain as we try to figure out whether or not this is a new entry into the Reddit community frenzy trade environment. They are going to participate in the Morgan Stanley Tech and Media conference virtually, but definitely a name to keep an eye on this morning.
Yeah, well, it's 38% short, Carl.
Jim?
You know, when the people see that, they think you can bust the sellers. Now, I have been a huge fan of Jay Farner and Dan Gilbert and have had them on and frankly don't understand why the stock didn't react to what was a very good quarter, where they basically laid out a story which just said, we can show you how when rates go up, it has not hurt our business. When rates go down, it's not hurt our business. David, you know Dan Gilbert.
I do.
And you know that Dan is a pretty serious fellow that put together a very good company.
As you pointed out, this is as much a technology company as anything else, and a fintech company. Was one of the largest IPOs we'd seen in a very long time, 2020 vintage, earlier.
Right, and it gave a good dividend. Now, there is a short position. There's also a convoluted ownership.
Yes.
Now, Jay and Dan have explained the ownership many times. All I can tell you is that in terms of defaults, they're the best. They have very few. And they attracted a lot of people with the Super Bowl ads. And, Carl, I've got to tell you, Rocket is a very easy place to get in terms of just the ease of mortgage. They don't give mortgages to people who don't deserve it, though. This is not that at all.
Rocket Mortgage is a mortgage originator that allows prospective homeowners to apply for a loan online. They make the process simple and user-friendly, which has allowed them to gain significant market share. As of 2019, Quicken Loans, which is owned by Rocket Companies, was the largest mortgage originator in the US, ahead of established megabanks such as Wells Fargo and Chase Bank. With the Fed cutting interest rates to near zero in response to the pandemic, mortgage refinancing has surged as homeowners rush in to lock in record low interest rates. This has been a huge boon for Rocket Companies as they make money from every new mortgage that they originate. This has led to record financial results, with revenue exploding 144% year over year in the fourth quarter. The financial success they had in 2020 left the company flush with cash, which they plan to distribute to shareholders with a $1.11 special dividend, as well as a $1 billion share repurchase program. But despite these financial results, there was a surprisingly high short interest in the stock leading up to today's squeeze, with close to 40% of the outstanding shares being sold short. One of the reasons short interest was so high was because the free float is so low. 95% of the company's shares are owned by the founder and senior management team, who are long-term holders and have no plans of selling that we know of. This leaves just 5% of shares available for short sellers to buy if they are forced to cover. So while only 2% of the company's market cap was shorted, this translates to 40% short interest as a percentage of the free float. Short-selling hedge funds are supposedly some of the most sophisticated investors out there, and you would think they'd be smart enough to avoid shorting stocks that already have such a high short interest, especially after the GameStop saga. But it appears that they have yet to learn from their mistakes.
Fool me once, shame on you. If fool me, we can't get fooled again.
In fact, just 1 month ago, Rocket Company's CEO Peter Beck went on CNBC and specifically warned short sellers against shorting his stock. Have a listen.
Hey, Jay, you guys don't have any specific news this morning, and yet your stock right now is up by about 13%. We've talked an awful lot about GameStop and the other companies that have seen Reddit kind of really boost their shares and go after short holders, or the shorts in those stocks that are heavily shorted. You guys had a pretty significant short. I think as of the end of the year, it was 30% or something. Why is your stock up this morning? What do you think about what's been happening with Reddit?
Yeah, it's an interesting week, and as we have come out as a newer company to the public markets, I think there's always going to be a little bit of a tendency for the shorts to show up. But I'll remind everybody, between myself and our founder, Dan Gilbert, and our leadership team, we own 95% of Rocket companies because we feel so strongly about our ability to grow. We've been growing for 35 years. We've shown consistent ability to grow and be profitable in any kind of market cycle. And so I think the more we tell our story, the more we explain to folks the platform that we're building, you'll see our stock continue to do the right thing. The other important component, and you just pointed this out, we got a lot of retail investors in our stock. It's one of those stocks that people understand. They get a mortgage. They know the experience. They're familiar with Rocket companies and Quicken Loans. And so I think what you're seeing is they're participating at a higher rate than some other companies. And I think that bodes well for our stock.
Are you happy to see the retail traders chase out the shorts?
Well, like I mentioned, I feel really strong. I've been here 25 years. I know all the things that we're doing. I understand the power of the platform. I understand the profitability we're able to drive. And so, my advice would be that this is not a stock that you want to be short in. You might want to rethink your position if that's how you're playing it. We've got a great track record and a lot of exciting things we're working on.
There's also been a surge in attention on Wall Street bets given to Rocket companies. User Sir Jackalot posted a screenshot showing his $1.7 million position in Rocket companies. He got in at $24 a share. Rocket is now trading at $39 a share, meaning he has made 61% returns on his $1.7 million if he has not sold. That's a $1 million gain in the span of only a few hours. Yesterday, on March 1st, user Tendy's Nuts posted this DD post explaining how the CEO of Rocket companies could force shorts to cover by their share buyback program. It turns out, if you had listened to that post, you might have been able to make money by buying Rocket companies right before the apparent short squeeze. User T-Bone519 is one such Wall Street Bets user, who says that he finally sold out of his GameStop position yesterday after seeing the Rocket DD post, and has now made about $4,000 on a quick trade on Rocket company calls. User Look at All These Trees posted this on Wall Street Bets, saying that he thinks that calls expiring this week on Rocket only go up to $36 strike prices, which means that every call that has been bought that expires this week is now in the money. However, he admits that he has no idea what the consequences of that phenomenon would be. Despite the apparent short squeeze currently happening, and speculation that could still get worse when this week's calls are exercised on Friday, there is still some very real risk to the stock of Rocket companies. There is a reason that many hedge funds tried shorting the stock in the first place. The biggest reason is that interest rates have been rising recently, and are expected by some economists to continue rising into the immediate future. This has caused a huge pull forward in mortgage demand as people realize that they should refinance their homes at record low mortgage rates, or that they should stop renting and instead buy a home now that mortgage payments would be close to or possibly even lower than their rent. If this is the case, then that would mean that Rocket companies' blowout results in the past 2 quarters may not be indicative of their long-term outlook for the business. However, it is also worth mentioning that the CEO of Rocket Companies has said in recent interviews that the company has a track record of strong results regardless of the state of interest rates. So what do you guys think? Is Rocket Companies the mortgage provider of the future, or is the recent price action merely a symptom of a technical short squeeze? Where do you see the stock going from here? Let us know your thoughts in the comments section below. Also, make sure to check out our second channel, where we originally talked about the potential short squeeze in Rocket Companies the day before it actually happened. In the meantime, make sure to like, subscribe, and follow us on TikTok and Instagram, and we'll see you in the next video. Wall Street Millennial, signing out.